Hey there, how's it going? This is Alfredo. Welcome to my Random Walk channel, and today I want to share with you my 6th investing strategy that I follow in my retirement account on N1 Finance. Let's begin. Number 1, do you spend your day staring at your Robinhood app, just looking at that stock price going up and down every second, or your portfolio value? Yeah, we all do that. Now, for my retirement account at N1 Finance, it's not a day trading account. It's not swing trading. There are definitely other platforms out there that can accomplish that goal for you. Now, it actually reinforced me to sort of look at a long-term horizon and investing for the long term, and so that I can be in the market rather than trying to time the market. Number 2, this is a tax-efficient retirement account. So any capital appreciations and gains from selling stocks, bonds, or ETF are not taxable, which is pretty awesome. But this is not a tax advice, so definitely consult your qualified tax advisor or accountants. Number 3, this portfolio simply does not focus on dividend growth strategy. FELIX already made a video on this topic in this YouTube channel. Definitely worth checking out. I will link down below, and I quote, "Dividend growth stocks have market-beating performance on average, but it is mostly explained by their increased exposure to the value and profitability factors," unquote. In other words, dividend investing is basically value investing in disguise. And for me, it is nice to have feature, but not a requirement. It is not surprising to find that 60% of the US stock and 40% of international stock don't pay dividends. Knowing that dividends do not help me identify a good investment, and that the importance of diversification in capturing market return. And ironically, a dividend growth strategy might lead to weaker diversification, since you will simply not invest, 35 to 40% of these company or great company that otherwise might generate better return and have cash flow regardless, but they choose to use their cash differently. And that leads me to the next important strategy. Billionaire investor Warren Buffett famously stated that diversification is protection against ignorance. It makes little sense if you know what you're doing.
Stop! It's ignorant! You're being ignorant!
Number 4, diversification. So it's important for me to diversify or invest regardless of which market or political climate we're currently in. So I prefer to allocate assets across sector, industry, and even geography. I meant geography as in terms of countries or region for that matter. So that leads to international stocks. So currently in my N1 Finance portfolio, I have these stocks in my holdings. And these are foreign company, both listed in the US or like NISC or NASDAQ, and ADR, which are American Depository Receipts. And I will list them and explain briefly what they do. First one would be Alibaba, ticker symbol is BABA. So think of Walmart plus Amazon and eBay combined. So Alibaba is considered the world's largest retailer e-commerce company. It's based in China, and they are into e-commerce, retail, internet, technology, perhaps gaming as well, and definitely financial. And just this past week, Alibaba announced that their financial arm, Ant Financial, will be publicly listed on the stock market. The next one I have is JD.com. The company, the ticker symbol is JD. Is China's largest online retailer and biggest overall retailer, so they say. And it's owned by the founder, but interestingly, it's 20% holding, it's by Tencent. And then the 12% by Walmart actually. So they do a lot of high-end retailer. Also, they invest heavily in high-tech and autonomous drone delivery system. And so that's something that they are forward-looking company, and that I thought was pretty interesting. Next one, it's Spotify technology, which we all know what Spotify do and use, music streaming and media service provider. But just so you know, even though it's public listed on NYSE, it's actually a Swedish company. So it's actually considered a foreign company, at least for me, that is. The next one I have is CLTD SEA, and ticker symbol is SE. And this one is actually an ADR, which is American Depository Receipt. So C is an internet company based in Singapore, mainly focused on Southeast Asia and Taiwan markets. And they offer a gaming platform, online e-commerce, and online financial services. So I would think of them as Amazon with Twitch or Epic Steam system plus PayPal. Next one I have is NXPI Semiconductor NV. Their ticker symbol is NXPI. They're American and Dutch semiconductor manufacturer. Next one I have, which I actually find it very interesting, is Mercado Libre. Mercado Libre ticker symbol is MELI. It's an often missed company. It's based in Argentina and it's incorporated in the US, but they mainly operate online marketplace. They're dedicated to e-commerce, online auction. So think of it like Amazon plus eBay plus payment system, which is like PayPal. And so they provide all that, and including the online Shopify platform system. But they're focusing mainly on Central and South American market. Next one I have, it's Elbit System. It's a basically Israeli-based international defense electronic company. Nothing beyond that. The next one is kind of interesting. This is called Yum China. So Yum China is a spun-off company from Yum brand, which is a base America, which they own KFC, Pizza Hut, Taco Bell, etc. So if you're familiar with it, this is actually Chinese-focused fast food restaurant, and they also do own other franchise or chains like Hot Pot Company that are littered across the U.S. Also, next one I have is New Oriental Education and Technology Group. Ticker symbol is EDU. So they're a provider for private educational service in China. Learning and vocational training center, mainly focus on TOEFL and GRE exam. And in the US branch, they focus on preparing students for the TOEFL, SAT, ACT, GRE, GMAT, and LSAT. This is sort of interesting where I see there's two companies that are public listed that are both doing similar things. The next one I have is TAL Education Group, TAL, that's a ticker symbol. It's a Chinese holding company that offers after-school education for students in primary and secondary school. Imagine that. Number 5, understanding what risks and rewards are. Risk is the possibility of something bad happening. The type of risk I'm focusing in this video is uncompensated risk, which is taking on additional risk without generating any higher return, so the probability of winning is low, such as lottery. If it just focuses on US market, investing in the total market would give you a compensated risk. Since you own the whole entire market that's weighted average, you are compensated for taking on risk in your portfolio for higher expected return. And conversely, if you own just one individual stock like GE or an only single market sector like REITs or industries such as airline or restaurants, you would have significant uncompensated risk. By investing one stock or one single market sector, you are not compensated for that extra risk that you're taking, since that risk you can easily diversify away by owning different sector, different company, different industry altogether. So in that sense, owning the entire market actually make a lot more sense, and you will actually generate it or expect to get a same return as the market, which is a lot safer, less riskier, but you get higher return. So number 6, last thing I want to mention, it's a bit of a personal finance tip, is that to look at spending versus investing. So for me, I have developed discipline over the years to basically force myself, for every dollar that I spend, I invest twice or sometimes 5 times that amount back in the market. So last week I spent $100, for example, then I will deposit $250 or sometimes $500 back in my brokerage account to invest. And I think that's kind of enforcing the idea that, being thrift, being saving, but also kind of making sure that you're always investing rather than spending. So that way, at least the reward for not spending as much is to investing for more growth. So that's it. Thank you for watching toward the end. If you made it this far, it took me almost 2 days to edit and rewrite and rescript. I really appreciate for your support. If you have any questions or comment and feedback, or drop me some knowledge in the comments below, I'll definitely reply back. And stay tuned for more. Please make sure to like and subscribe. Thanks. Bye.